Hi, this is Jordan Moorhead, and this is Austin Real Estate Investing. Today, we've got Grigoriy Gorshteyn, a newer investor here in Austin, but a longtime investor up in Minneapolis, Minnesota. He's also a broker, a property manager, and an investor in multiple states. And today, he'll share more about that. But real quick, Grigoriy, how you doing?
Doing well. How are you? I'm happy to be in Austin and away from the crappier weather that's happening in Minnesota. So it's
Sure.
good to be here.
Well, yeah, and we'll definitely talk about why you're in Austin here in just a bit. But real quick, who are you and how are you involved with real estate investing?
Sure. So my name is Grigoriy Gorshteyn, as you mentioned. I got into real estate at a very young age. I got my license when I was 19 years old. My father has been in real estate since 2000. I saw him work through the Great Recession in '08 and how he maneuvered through that. And they started investing when the market crashed, primarily in North Minneapolis and Minnesota, into Section 8 housing. And I saw them do that. And as I got older and graduated college and whatnot, I got into real estate investing, and now that is my full-time job, along with being a broker and a property manager.
Awesome. And yeah, I definitely want to talk more about Section 8 and obviously you and what your family's done. So I obviously know your story pretty well. We've known each other for a long time. Your family started investing before the meltdown, correct?
Yeah, so they actually bought some properties. My parents did with a partner back in the early 2000s. They bought I believe it was three properties in the suburbs and in better suburbs of the Twin Cities. And they basically, had rented them out, and the recession happened. So they powered through it. And then once the market started climbing back up, they weren't one of those unfortunates that had to go into foreclosure and let their properties go, as a lot of people did, but they were able to bear the storm, so to speak. And they wound up selling all of them, after the market came back up, 2 to 3 years ago.
And yeah, I really want to talk about that a little bit too. So obviously I know what happened with your dad there. He was my first broker, but he was underwater on all those properties for a while. And I think, you mentioned a lot of people went into foreclosure. He absolutely could have just let him go, but he didn't. And I tell everybody that I talk to, I say, hey, if your value ever goes down, there's a simple way to not lose money. Just don't sell. And that's exactly what he did. He just waited until it made sense to sell.
Yeah, exactly. And on those three properties, they had one in Coon Rapids, one in St. Louis Park, and one in Eden Prairie. And those three houses, they were doing Section 8 rentals on all three of those. And the mortgage was being paid for, but they were obviously putting money out of pocket through those, 2 to 3 years, 4 years, for maintenance and things like that. So it wasn't, cash flowing as well as obviously properties are cash flowing now, in any major market. But back then it was tough because all the mortgages were super high once, the arm was up, and they went to market interest rates. And they decided they're not going to go to foreclosure. They're going to just put in a little bit of money that they had to every month or so to keep the properties, because my dad obviously knew the market is cyclical and it's going to come back, and they'll make their money down the road just through equity.
Yeah. And I think that's a good lesson to a lot of people is don't freak out right now or right when something goes wrong and think, oh, it's not better now and it's not better in 3 or 6 months. If you wait long enough with real estate, your prices are always going to go up. Your rents are always going to go up. It's typically always, there's never a time where 10 years from now, the prices aren't up and rents aren't up. Maybe a year from now, prices might not be the same and rents might be flat or down a little bit, but you can never look back and say, oh, in 1990 and in 2000 prices are much higher than in 1990. So
absolutely.
Just keep time on your side. And yeah, so you mentioned that, your family got into real estate in 2000. How did your family get started doing that, and where are you from, and like what were they doing before that?
Yeah, so originally, sorry, that's my dog. slipping on the floors here. But originally we're from Moscow, Russia. My dad had his own construction company there. It was one of the first privatized construction companies when the Soviet Union collapsed. So we were doing pretty well. And when we moved here, we didn't really have much. My dad moved the year after us. His goal was to keep running his business and his company in Russia, in Moscow, and travel back and forth. However, that didn't pan out. So my dad's first job in America was Pizza Hut. He went from being a very successful business owner at, from the age of 30, early 30s, he started his business in Russia and came here at the age of 37 and went to work for Pizza Hut, mopping floors, driving pizzas, making pizzas, whatever he could. My mom walked 16 miles a day just to take ESL classes so she could learn English. They both wound up getting their like Microsoft Office degrees at like Hennepin Technical Community College after both having, top degrees in Russia. And it was really my mom who pushed my dad into real estate. He went from doing the pizza thing to working at a Dyna Couriers, which was like a delivery company where he just delivered random things to businesses. And, he was working 12, 14-hour days just to support the family. And my mom kind of pushed him into real estate. That we bought our first property. We were on Section 8 ourselves when we moved here for about a year and a half. And my parents wanted to get off it as soon as possible because they've always been independent. And, growing up in the Soviet Union gave them tough skin. So they didn't want to be on government assistance. That was just their, personality types. And so we bought our first property in Minnetonka in Minnesota. And that was probably in about 2000 or so, 99 maybe. And that's when they went through that whole process of buying their first property in America. And my mom just pushed my dad into it. And he, he had to take the exam several times because he literally just like memorized what the questions look like because he barely spoke any English. So it was like photographic memory of like the question and the answer that goes with that question. So it took him, I think, 3 times, which is still pretty good considering he spoke no English. So
Yeah.
that's when he started, was around 2000. He joined Coldwell Banker Burnett. And then in 2002, as soon as he could, he opened his own brokerage.
Yeah, that's funny. It took me 3 times, and English is my first language. So
Yeah, I remember that.
what's that say about me? Awesome. Well, yeah. We'll talk more about Minneapolis and Section 8 and all that stuff here in a second too. But why are you in Austin? Why come to Austin?
I mean, if you've ever lived through Minnesota winters, which I know you have, but those who haven't, you'll understand that, if you have the ability to escape the winters, you should do that, unless you just love not being outside. But really the reason is I came to Austin for the first time maybe 3-4 years ago, and I just kind of fell in love with the city, the energy, the vibe here. And I knew that, my goal was to get enough passive income where, my career wouldn't hold me back and where I could travel and I could be where I want to be. And Austin's obviously, as everyone's heard in the news and everything, a growing market. It's exploding. I knew I wanted to be involved somehow. I knew I wanted to have real estate here. And so I bought back in August. This last August, I closed on a condo. Thank you, Jordan, for being my realtor here because I'm too lazy to spend 180 hours taking the classes here. So I bought the condo. There were some issues with lending and stuff, so I wound up getting a hard money loan on it, which I'll refinance here in a few months out of that. But yeah, it's a 2-bed, 1-bath condo. It's about 15 minutes south of downtown. It's a great location. Actually super close to where you just bought your 4th house hack here.
Yeah.
So yeah, I love the location. I love the city, and I wanted to escape the winters. That's really why I'm here.
Awesome. And real quick, so you're 100% financially free today. You work for yourself. That wasn't always the case. So how did you get started investing in real estate? And really, what did that path look like for everybody listening? Because I think people will say, oh, I hate my job. I got to get out of my job, and have a real short timeline for that. If I want to be done next year, I want to be done in 2 years.
Sure. So for me, I went to Claremont McKenna College. It's a small liberal arts school in Southern California. I majored in economics and accounting, and my first job out of college was a staff accountant working for Carlson Companies, making 50 grand a year. This was back in 2013. Pretty good money. Definitely could afford to do things I wanted to do, live on my own, and whatnot. I bought my first investment property. I got my job in March, and in June, I closed on my first duplex in North Minneapolis. It was a 4 bed, 1 bath in each unit, and it would cost me $82,000. Um, I cash flowed really well on it, and then I had a time in my life where I decided real estate wasn't for me, and I was kind of a serial entrepreneur and went through different businesses, laser tag, non-emergency medical transportation, vape shops, was just trying to find myself. Didn't want to do necessarily what my dad did. A lot of kids grow up and they're like, I don't want to do what my parents do, and so I fought it for a long time. But that was the first property I bought, was back in 2013 or yeah, 13 or 14. And it's worth like 260 now, and I bought it for 82. I sold it to my parents because I didn't want to deal with it when I was younger. Um, but I totally forgot your question because I went in a circle.
What basically, why did you get started in real estate investing? And then how long did it take you to achieve financial freedom? So everybody wants to achieve financial freedom really quickly. And you got there in your own way.
Sure. So yeah, so that first job, I knew really quick that I didn't want to work full time my whole life. I saw the same people walking in with the same lunch bags and coffee mugs, looking all sad into their cubicles, and I just knew that wasn't for me. So I quit that job after 13 months, and I never really went back to corporate per se. I did all my own things, and then about 5 years ago now, in 2017, I got back into real estate. I got my license back in 2016 in Minnesota. And then I bought my first investment property again in 2017. And at the same time, I was working a full-time job. But I told myself that I'm going to keep my full-time job in the real estate industry. So I wound up working for Greystar, which is the largest property management, multifamily property management company in the world. I think they're close to 700,000 units under management or so. And they're all over the world. And so I wound up starting at a job that was paid $15 an hour. I had to humble myself, and I wanted to gain the experience, and I knew the company was big enough where I could move up pretty fast. And so it took me a total of 3 years and 7 months with that company to be able to quit my full-time job and be financially independent. And that happened 2 summers ago.
Awesome. Yeah. And I think I just wanted to illustrate that point to people where that was actually really quick. I think you did that pretty quickly, 3 years and 7 months to be financially free, in my opinion, is pretty quickly. And I just wanted to illustrate that point to anybody listening. That's probably around the fastest you're going to be able to do it. I think if you can do it in 5 years, you're doing pretty well. So it's important just to have that time horizon. And that's if your expenses are reasonable. If you need to make $10,000, $15,000 a month, $20,000 a month, it might take a little longer than that, unless you're willing to go a certain way with your real estate investments. And we'll talk a little bit how you get really good cash flow here in a minute too. But I think it's important to understand that, yeah, it's probably going to take 5 years, and it's probably going to take sucking it up for a while and doing stuff you don't want to do to be able to do whatever you want to do in the long run. And it's hard to see that when you're starting, but that's just kind of how it is. So what are most of your I guess your condo in Austin that you live in, and you talked about that a little bit. What are you going to do with that when you're not in it?
Yeah, so the idea, I furnished it all, so it's a 2 bed, 1 bath. So the idea is that I will use it during the winter months, and then I'll rent it furnished for about 6 to 8 months, depending on the year. Eventually, obviously, I'm working with lenders now to get further approved to buy more real estate in Austin. So my goal is, before I leave here in the springtime, is to have another property under my belt here in Austin, so that I could just keep this as a rental here and move, next winter, move to that next property, do some house hacking, ideally a duplex, something of that nature, and just kind of continue to do that here in Austin. Obviously, the numbers have to make sense, and the cash flow, has to be there. And I know I can't compare it to my cash flow in Minneapolis just because I do a very niche thing there, and the numbers are ridiculous. But I know that if I make a couple $100 a door here, and my mortgage is being paid down, and I have the appreciation to look forward in Austin, I'm okay. Someone else is paying my mortgage and my expenses. That's great. That's all I really need.
Yeah. So what is your niche in Minneapolis that you spoke of? And I think it's important people realize you achieved financial freedom in roughly 3.5 years, and you had a specific niche that got you there.
Yeah, so I mean, my niche is buying in distressed areas, mostly North Minneapolis. That's where I have, most of my units. The reason I buy North Minneapolis is because obviously there's a lot of properties that need help and need some work, and I want to create better housing. I do affordable housing, so I do Section 8 housing, or Simpson housing, or MHR. There's different entities, stable homes, stable schools, basically all state, county funded programs that help people who are in need pay their rent. There are some things that are involved with doing Section 8 rentals, like passing their inspections, having yearly inspections, and keeping your property updated. Because unfortunately, what happens in a lot of distressed areas, not just in North Minneapolis, but all over the country, is that landlords stop taking care of their property. They're charging lower rents, for cash tenants, but their properties are destroyed. And that's not what we pride ourselves in. And with my property management company, we manage about 50 units right now, which like 99% of them are in North Minneapolis. So
Yeah.
that's kind of, my niche investment strategy. So.
Yeah, absolutely. And that's not something that everybody wants to deal with. And I think your company can help them. You say, hey, we can deal with it. You can just buy it. So why do you buy there, and what's your target for property in North Minneapolis? Which, for people listening, obviously we're talking about Austin real estate here on the podcast. North Minneapolis is probably, I think distressed is the right word for it. It's a distressed area in Minneapolis. It's lower income. It's different than any areas you're going to find in Austin. And so what are you looking for in those areas? What types of properties and why?
Yeah, so we look for single family homes that are at least 4-bedroom. We'll buy 3 bedrooms and make them a 4 or 5 bedrooms. So we look for properties where we can finish a basement and add a couple bedrooms, or we can take a big room, make it into 2 rooms, take the dining room, take a family room in the basement. So the idea is always to buy something and increase the amount of bedrooms, while obviously still making sure to have a dining and a living room for our tenants. But the reason we do that is because Section 8 pays by bedroom count. So their rent goes up, and there isn't any kind of formula, and it changes every year, and rent goes up with Section 8 every year, just like any other landlord who raises the rent every year. And it surprises me how many times I see that landlords just don't increase their rent every year. I mean, we increase our rent, 4 to 7% every year. And Section 8 is cool with it. But so we look for single family homes. I personally don't like multifamily just because then you have to deal with, the snow and the lawn care and who's going to do what, and the trash around the house, and tenants tend to kind of blame each other, their neighbors. Oh, well, they didn't do that, we did that. And, so I love the single family. Most of the families, they're big families. They're families with, 6 to 11, 12 children. So when we house, our smallest property has 8 people in it, probably 7, 8 people.
Wow.
And our 6-bedroom houses have, 12 to 14 people in them. And they obviously want their own yard, and they want their own space and their own house. So they know their kids are going to run around and be loud. And so that's kind of what we look for. We do nice updates to them. We'll paint, we'll put in new floors, we'll, update kitchens and bathrooms if we need to. And we provide nice housing for, for those who are in need.
Nice. So you see a lot of properties because you're a property manager and a rental property investor. Could you tell our listeners some advice on how to avoid pitfalls or a bad deal or something you don't want, so I know if you're looking for a property to run a Section 8 rental out of, there's certain things you're not looking for. Or, like you said, there's reasons you don't like multifamily. Can you just give our listeners some advice on how to avoid a bad deal?
Yeah, I mean, obviously the numbers have to work, and you have to always budget, for remodel expenses that you don't see happening. I bought a property in a duplex in Orono this last May, and Orono is west suburbs of the Twin Cities, and it's by Lake Minnetonka. It's a nice area. And I found out that there were foundation issues, and that sent me back an extra 10 grand in my budget. There were some plumbing issues and things like that. So you're always going to potentially go over budget and some projects. So you want to make sure you account for that. But the biggest thing, if you're talking about Section 8 housing and what to look for, is the big thing is lead-based paint or chipped paint, things like that, because obviously most of these families have kids that are below 6 years of age, and that's really who gets impacted the most. So you want to make sure that if your property is older than 1978, that you go through and you paint everything, and you make sure there's no chipped or peeling paint, so that your tenants can be healthy and not have to worry about that. And that's something they look at during the inspection as well. So if we're talking about Section 8 housing, that would be my biggest point of advice, is make sure you go through every single piece, window sills, door trim, walls, exterior, everything, soffits, fascia, anything. Can't have any chipped or peeling paint.
Yeah, no, I know that it's a big deal. And I don't know if they even discriminate before 1978. I think if they see it, they're probably upset about it. But of course, before 1978, that's a big risk. If they find lead paint, it can be painful for you, the landlord.
Yeah, and I have experience with that. One of my first properties that I bought in 2017, once I got back into real estate investing, I had a duplex in North Minneapolis, and my contractor missed 2 windows. So there was chipped paint in the windowsill in between the 2 windows. And so the Section 8 inspector caught it, and they requested for me to do testing and things like that and get a clearance report from the county. I didn't, I obviously had to think about it, and I wound up selling that property, and that actually wound up making me some good money that I invested into other real estate. But that's happened to me. That's why now I'm very careful, and our maintenance techs who do our turns, I make sure that I tell them to go through every single nook and cranny of the property and make sure that it's just taken care of.
Yeah, absolutely. So again, guys, anybody listening, if the property's built before 1978, make sure you pay attention to the paint. Chipped and peeling paint can really hurt you. Luckily, there's not a ton of properties built before 1978 in Austin, but there's a fair amount. So especially if you're looking at multifamily or older properties closer to downtown, there's tons of properties built before 1978 in those areas. And that can hurt you if you're trying to do any sort of subsidized housing or any housing. You should make sure lead-based paint's taken care of in any housing. And Grigoriy, what's one thing you tell some newer investors you work with? What's one thing you want newer investors to know when they're getting started?
The biggest thing that I tell the investors that I work with, and a lot of them are younger folks, who are just starting to get into it. There's such a big worry about the economy right now and what's going to happen with the real estate market. Is it going to crash? Is it going to keep going up? Is it, and if there was anybody who could predict that, they'd be a happy person. You kind of never know with the real estate market, just like you don't with the stock market, But the biggest thing I tell people is, if the numbers make sense today, buy it. Because to me, that's that. Everyone always asks me, why am I buying through the peak of the market, or what people's perspective is that it's the peak of the market. And I tell people, well, if I bought this property for $230,000 and it's going to gross me $28.50 a month, way over the 1% rule, the cash flow is definitely there. My mortgage on that property is probably $1,200, 13, $200-300 for vacancy and expenses, and I'm still cash flowing, $1,200-1,300 a month. So, to me, I just always tell people that don't overthink it and don't think in the future or the past, just think today. And if the numbers work, then buy the deal. Because to me, if my properties that are worth 250, 260 right now become, worth 50,000 tomorrow, that doesn't matter to me because the cash flow is still there. I'm still making rental income. My mortgage is still being paid by somebody else. And I know that in 5 to 10 years, I'll be in a good spot again. So I'm just not worried about that. And that's kind of what I tell my younger investors.
Yeah, I think especially with what you're doing with Section 8, the rents are always going up. Section 8's not going to call one day and say, oh, rent's going down by 50%. And the rents have not ever dropped that dramatically. I think in periods of time where you've seen distress in rental markets, rents have been flat or taken slight declines, but there's never been just a cratering of rents. Everybody fears that, but you can't find any spot in history where that's happened. If you say, oh, there's a geographical area where everybody just vacated the area and rents went down a lot. Yeah, that doesn't have anything to do with the overall economy. That's absolutely not happening to Austin. That's not going to happen if you have some sort of Section 8 property when there's a humongous shortage of Section 8 property available. So just know what you're doing, know where you're buying. Don't buy in a market that you think is going to decline massively because all they do is oil and gas work there. And you say, oh, in 30 years, maybe oil and gas might not be that much. But yeah, I think if the numbers work today, rents are going to go up. So prices, who knows, prices might level off. They might keep going up or they might go down a little bit. Just don't sell. You only lose money when you sell. Awesome. So what's your favorite business or mindset podcasts that you like to listen to?
I listen to a lot of Bigger Pockets podcasts. It's probably a lot of people who are in real estate do. I love most of their guests, and especially ones that aren't necessarily in real estate. Because I'm in real estate 24/7. I talk about it with people. I can have a 10-hour phone conversation with another investor just because I love it and that's my passion. But I love it when they have guests who are talking about kind of the spirituality side of things or the mental mindset and kind of how you have to perceive things and just kind of not let things get to you. Because if I deal with all kinds of situations being a property manager, especially with Section 8 housing. And if I would let that stuff get to me, I would, well, I already don't have hair, but I'd probably lose my beard at this point. So yeah, I mean, I to me, it's just, yeah, that's kind of, and your podcast pretty good too.
Oh, yeah.
No, but yeah, I listen to a lot of, on my drive down here, that's like basically all I listened to was like the last 7 episodes of the Bigger Pockets podcast. So I just love them.
Yeah, no, they're great stuff. Love the Bigger Pockets podcast. And again, for anybody listening, Bigger Pockets is not just a podcast. They have a website with forums and all sorts of stuff too. Grigoriy, what's next for you? What are your long-term goals and what's your vision in real estate? Obviously, you're financially free now. So where are you going to go?
Sure. So my primary focus right now is to keep growing out our property management team back in Minnesota and the Twin Cities with the niche of Section 8 housing. I don't think there's a lot of property management companies that kind of specialize in that. So I kind of want to be that person just because it kind of happened that way by nature. In terms of investing, I want to buy more real estate here in Austin, obviously. So get ready, Jordan, to go look at a bunch of places. And then in Minnesota, I want to keep buying single families that are going to cash flow me over 35% cash on cash returns, because that's what all of them do. Some of them are now infinite returns because I've burned them and I've gotten, 90% of my cash out of the deal. So that's what I'm looking for in the near future. Long term, in the next, I'm 32 years old, and I told myself by 35 I want to own my first 50 to 100 unit building. So that's going to be kind of my next long term, 2 to 3 year plan, is to basically start looking and get into multifamily, just because I have the close to 4 years of experience in multifamily property management, going from leasing to assistant manager to property manager. So I know what to look for. I know, I can look at the budget and I can make sense of it, and I can audit the property management company there and see if they're doing a great job or not. Or maybe even start my own, who knows? But that's kind of my, short-term to semi-long-term plans.
Nice. Yeah, no, I think that plays well together. You've got all that property management experience. You've got an accounting background. The multifamily real estate is all numbers, but especially multifamily. What's the best way people can get a hold of you? So let's say somebody's looking for property management advice, or they need to maybe use your services. What's the best way somebody can get a hold of you?
Sure. So we have a website, and I'm about to kind of redo everything, but it's Algo Realty, algorealty.com. I am a realtor, Grigoriy, on Instagram. I post a lot of my remodels and our deals and a lot of food because I'm a foodie as well on my Instagram. But that's realtor Grigoriy, Grigoriy.
Yep.
Those are kind of the two places.
And we'll put all this in the show notes too, guys. So remember, anytime you ever want to hear more about somebody, look in the show notes, and there's links to everything they do in there. Last question, most important question. What's your favorite restaurant in Austin here?
Man, I've been to a lot of them here, but for me, it's Terry Black's. It's probably gonna have to do it for barbecue. The one in Lockhart.
Oh, yeah.
That's
Yeah.
close enough to Austin, because the one in Barton Springs gets so busy. The line's like 3 blocks out the door. So
Absolutely. Yeah. Anybody listening to that hasn't been to Lockhart and eaten some of the barbecue there, Schmitty's, Terry Black's, it's like the original barbecue places that have all branched off into chains and are all around Central Texas now. But it's really cool. Well, awesome, Grigoriy. Thank you so much for coming on today. Again, anybody needs to reach out to Grigoriy. It's algorealty.com and Realtor Grigoriy on Instagram. I'm sure he'd love to talk.
Yep. Thank you, Jordan, for having me. It's been a blast.
All right. Thank you.